Ta'ala make this meeting beneficial and grant us sincerity in our intentions and bless us with wisdom to implement what we learn. Allahumma ameen. Allahumma rabbana zalamna anfusana wa illam takfir lana wa tarhamna lanakunanna minal khasirin. Allahumma rabbana atina fid dunya hasana wa fil akhirati hasana wa qina azaban nar. ربنا أغفر علينا صبرا وثبت أقدامنا وانظرنا على القوم الكافرين. اللهم تقبل دعاء. بسم الله الرحمن الرحيم. قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد.
Kaiwan, thank you for that. May Allah accept it. So, quick, without much ado, I would like to go to the profile of our speaker today. Our speaker today is Mr. Hakeem Oyewale. He's the Chief Executive Officer of Marble Capital Limited. He's an author, Anderson Scholar, and has over 20 years of extensive investment banking, credit marketing, trade finance, and sustainable finance. He managed the Stanbic IBTC Nigeria Equity Fund, Nigeria's largest mutual fund, and was responsible for the launch of the Stanbic IBTC Ethical Fund. Hakeem is a fellow of both the Institute of Chartered Accountants of Nigeria and the Chartered Institute of Stockbrokers. He's an associate of the Chartered Institute of Taxation of Nigeria and the Chartered Institute of Bankers of Nigeria. He also holds various decorations and awards from various notable institutions. He holds a doctorate degree from Da Vinci School of Business Leadership, an MBA from Manchester Business School, United Kingdom, and a BSc Honors degree in accounting from the prestigious University of Lagos. He's currently a member of the Securities and Exchange Commission Financial Literacy Technical Committee. I mean, we all agree that we have on the call and a distinguished personality, and I pray and I hope that we're able to take as much as possible from him. You have the floor, sir. Let me check if I think I need to make it first. So you have the floor, sir. Assalamu alaikum.
Wa alaikum salam wa rahmatullahi wa barakatuh. It's a pleasure to be here, and I really appreciate the opportunity to come around and speak to all of us. I hope you can hear me very well.
We can see you.
Can I assume you can see and you can
hear you clearly.
Okay, cool. Without wasting time, I will just dive into the topic, and I will request, if you don't mind, to just note your questions and let us have a conversation around it when I'm done, so that we'll be able to have it in a structured manner. Okay, so I'm to be speaking today on funding your venture, the money move, and we all know, just like the speakers ahead said, a previous speaker said, this is an exercise that's trying to assist us in doing what is called the money game, playing the money game, making the right moves, and the topic that was given to me is to support us in a conversation around funding your ventures. How do you fund your venture? Especially if you've already gone through a bit of some conversations, planning, regarding transaction you want to do, projects you want to get on. Now, the question is funding. We all know how important finance is to most transactions. The Yorubas have a saying that if the money is not at home, then you cannot do anything, So it's important that we raise funds for our project. It's more important that we raise the appropriate funds for our project. And I would please like anybody that is here to listen to that. It's good that we raise funds for our project, but it's a lot more impactful when we raise the appropriate fund, for our projects. And I will explain what I mean by appropriate funds in the next few slides. When you're talking about a project, there are some basics that you need to clear. The first is you need to understand what the project is all about. What is your business model? What do you want to do? What areas do you want to focus on? It's extremely important that you are able to document with a lot of clarity what your business is doing, what your business aims to do, how you're going to make money. If you're not going to make money, if it's a philanthropic business or opportunity, let it be clear. You're not here for profit. You are here to serve a particular purpose. And you are doing it without any intention of profit making. Now, that will make your lawyer to design the nature of incorporation they should give your project, whether it should be by guarantee, and all of that. But if it's going to be profit making, they will also need to understand whether it should be limited by liability, whether it should be a PLC, and all of that. But it's extremely important that you understand and you have a written documentation about your business model. Are you selling a product? Are you offering a subscription? Is it software as a service? Is it consultancy as a service? Anything you're doing, you need to understand that particular strategy that you want to use to make it to be successful. So you have some edutechs. What they'll be doing will be freemium access, with a premium upgrade for exam preparation tools. That's because they've identified what they want to do and they've been able to define it. The second point for me, apart from your business model, is for you to be able to understand the value proposition that your business is meant to provide. What is the value proposition you are looking at? What is the plan that you want to achieve? And how are you going to solve that particular problem? A compelling value proposition can be the difference between getting funded and not getting funded. Okay, remember I said that you need to get the right funding, the appropriate funding. If you do not have the right compelling value proposition, you may not get funded. Even if you get funded, you may not get the right funding. Now, all of these are very, very important, as you're going to see in subsequent slides regarding the different types of funds and the different fund options that you have. The next slide here speaks to how to access your funds. You must make an assessment of what you need. You can have two persons trying to set up a grocery business, a pharmaceutical business, and one person will say, you know what, I need ₦1 million to set this up. Another person will say, no, if I don't get 50 million naira, I cannot open a pharmacy. I have to get the right location. I have to get the right staff. I have to get, no. The other person, so you know what, for me, I don't need all of that. All I need is just a simple access, and let people start buying. Now all of that will impact the funding that you are going to get. They're going to impact the funding you are going to get and whether it is also the appropriate funding for your operations. Okay, so please, we need to be very, very careful. There are some transactions where your funding has to be in local currency. Some it has to be in foreign currency. If you are trying to build a gas pipeline, you better get dollar funded. If you are trying to build an oil rig, better get dollar funding because you're going to be paying your leases in dollars anyway. So if you have naira, then how do you have to go through the additional problem of getting yourself to be converting that naira to dollars. So it is important that you know the right funding, the purpose for which you are trying to use the funds for, and all of that are important in determining the type of fund you are going to raise. The second point, which is also important, is the runway. How long? When you start some projects, in private equity terms, they call some capital raise the burn-out rates, which means you are just spending money. In accounting, they call it sunk cost. You are spending money for some time and you're not cash is not coming in. You may need patient capital to allow you to spend money to hire staff, some staff before you even start the project. You may have to fire them. You need to register the company. You need to rent an apartment, build a store, get a warehouse, get a license. These are all costs that you need to incur before you even open your shop for people to come and buy what you are selling and give you revenue. These are sunk costs in most cases. So you must understand the runway. If the capital you have will only allow you to do registration and will not allow you to stock your shop, then that means the runway is very short. You must have the appropriate cash that will allow you from ideation to implementation to cash flow without putting pressure on you. If you have to pay for that funding, better make a proper analysis of the cost you are going to incur. So you need to understand that how much money do you need, what is the purpose of the funding, and how long will the funding last. So in banking, they tell us that you should not do assets mismatch, where you're going to take money for 3 months. You know your project is a 3-year project. You are building Kano-Kaduna Expressway, and you are seeking a 6-month facility from a bank. That is absolutely not appropriate, okay? Even the organization that's going to give you money, they will look at your project. If they don't have the funds for 3 years, they're not going to fund it for 3 years. Today, you have in the market a non-interest bank, Taj Bank, coming to the market to raise 20 billion naira for a minimum of 5 years before they can call the money. What does that mean? If they are successful in raising this money, they are able to finance projects for 2 years. They can finance the building of a mall without blinking. They can finance the acquisition of a trawler without blinking. They can finance the acquisition of a major project that will take 2 to 3 years before it starts getting returns. Because they already have money that is tied down for 5 years. They are matching against the funds, the tenure of the funds. The runway is appropriate for the project they are doing. So it's extremely important that we know the runway, we know the funding, what is needed for, and how much we really need. You may need to get a lot of experts to help you do analysis, do a lot of sensitization, sensitivity analysis. If I get this money, is it the right for me? No, it's not. You're going to finish the money in 2 years. Meanwhile, your project will only start bringing forth income after 5 years. Dangote Refinery, I've been on the burner for the last 10 years. Imagine if Aliko used money of a 2-year fund to fund it. It went through COVID, it went through all the challenges that you could not have predicted, cost overrun, time overrun, So all of those things are things you need to consider when you're trying to raise funding. Now, what are the different types of funding that are available? And I'm going to speak to this generally, and I'm going to be a bit focused on one particular source, which a number of us don't take seriously, but which is also a valuable source. The first funding source is bootstrapping or self-funding. You are a banker, you are an accountant, you intend to set up your business in 2 years. You can be saving from your salary. Instead of spending 100% of your salary, you can decide that you are spending only 40%, 50%, and be saving the remaining to allow you to start up your project. You get a bonus, you stash it aside in investment so that you have some money that will support you when you intend to set up your own project. So self-funding from personal savings, can help. If you're an organization or even a regular businessman that has multiple businesses, but you want to go into another line of business in a year's time, in 6 months' time, you could also elect to be saving from one of the projects to be able to fund the other one when it has reached a critical mass. Okay, so self-funding, both for personal businesses, personal operations, and businesses, they are always important. The next is venture capital. These are very, very big organizations that can help fund startups. They can provide huge funding. They can provide tenured funding, long-term funding, so you can also access them. Then you have angel investors. These are individuals that are very wealthy, and they are also willing to allow and submit to allow organizations to grow with mentorship, with a bit of funding, So that is what you get from angel investors, Then you have equity financing, where to get people to invest in your company, you give them shares. Okay, Mr. Man, okay, if you give me 5 million naira, I will give you 5% of my company, because my company is valued at 100 million naira. If they agree, they give you the money, you give them equity shares. When you make profit, you share dividend in proportion of their shareholding. Then if all of that does not work, you can go to borrowing, debt financing. Individuals can borrow money from banks, corporates can borrow money from banks, countries or sovereign states can borrow money from banks or from the markets. So these are all different types of funding, but you need to know which one is appropriate for you. Then you have grants, competitions. These are money that people give you when they understand your project and they believe that in the long term, you're going to be very, very valuable. They don't need anything. They just want to encourage you. So if you are in line with the scheme that they support, whether it's cancer related, whether it's football related, any project at all, they can ask you to submit your business proposals, and they will evaluate you against others, and they'll give the top 3 1 million, 1 million, 10 million, 10 million, whatever their projects. That's a grant. They're not asking you to return the money. They will just try and monitor you to be sure you are successful, because they are not just dashing money out. They are promoting a course, either entrepreneurship, either taking people out of the poverty line and all of that, But in all of this as well, these are different types of funding that may be appropriate for you, but there is what we call alternative funding. Alternative funding refers to monies from angel investors, money from venture capitals, money that is not the regular money you get from the bank. Okay, it could be crowdfunding, where you just put your project together and you say to people, hey, I'm setting up a farm. I need 100 million. You can come and bring 10,000. That is crowdfunding. Okay, you can have lines of credit. You can have invoice discounting or factoring. You can have peer-to-peer lending, as is done with most organizations, especially in the tech business. Now, so now what you get is that, when you're doing a lot of these peer-to-peer or any of these alternative funding, you need to be careful, because alternative financing reduces your cost, but it also comes with a bit of complications, which I'm going to speak to briefly. It can be very fast if you understand it or use an advisor. Most times you don't need collaterals for alternative funding, but the challenges, the return, if it's a commercial one, if it's a conventional funding you are seeking, they may be asking for a higher interest rate, because they know they are taking a lot of risk, and you don't even have access to most of these alternative finance opportunities, So you need to be careful when you are trying to have access to alternative finance. There are many other areas where alternative finance supports their growth. For example, private equity investors, private debt providers, franchises. What are franchises? Franchises essentially relate to where someone will allow you to use their name, like Coca-Cola, like Mr. Biggs, like Chicken Republic. You set like filling stations, Total filling stations, Ohando and all of that. You are the owner of the business, but they are lending you their name and some of their processes, knowing fully well that that will increase your sales, because you put Ohando, you put Shell, you put Mobil, you put XYZ on your NNPC, on your filling station, as against Mr. Y filling station. More people will go there. If you were to have earned 1 million naira before, you are like going to earn 10 million naira. So all you're paying is just franchising fee. But what you've done is that you've gotten some investment, some funding to improve your business, your working capital and the like. You have other more strategic or more structured funding that are also aligned with alternative financing or alternative investments, like ESG compliance notes, which essentially means that if your business is a sustainable project, you are allowed to, or you have access to using ESG notes to raise money, and that may come at a cheaper rate. Now, all of these alternatives, which I'm spending time on, they come with their pros and cons. The major challenge they have is that they are complicated, they are technical, they have complex valuations, and they are not always very liquid. Of course, there are benefits that less bureaucracy. Once you guys understand each other, they can give you the funding. Diversification of your funding sources. And like in franchising, it gives you above average return because you are now able to utilize just a name, a brand has been built to get more revenue than you ordinarily would have gotten. Now I'm going to get to the heart of this presentation, and that is what I said earlier. The appropriate funding, is needed for your project. You have your business model, you have your transaction model, your valuation model, you have all the business plans done. Now, the point you need to do is you need to understand what stage you are in the investment process, in your business process, to determine the right money move you should make. Are you still in the idea stage? You are still in ideation stage. You are still brainstorming. You are still bringing people together. You are still getting friends. And at that stage, you don't need to go and borrow long-term funding. You just need to bootstrap. You just need family and friends that support you, that are willing to give you 100,000 naira, 50,000 naira without calling their money back, at least not in a hurry. So when you're in the ideation stage, you are still brainstorming, you are still doing plans and all of that. Don't go out and raise $1 billion naira. Don't go out and meet a bank. Don't go out and commit yourself to an equity raise. Just use some bootstrapping method, friends and family. When you have an MVP, that is when you can call on angel investors, you can call on early stage investors, VCs, you can call on some banks, if they are banks that support that kind of idea. But until you get to a minimum viable product stage, you need to be cautious about the kind of funding you need. Okay, when you get to the growth stage, then you now have opportunities to have more structured debt financing, engage with the bank, and raise a commercial paper, raise a sukuk note. Venture capitals can come in, strategic capital investors can come in. You need to understand that you are now at a growth phase. You are not proving to anybody that this is a successful business. It is successful. But instead of you having a revenue of 100 million naira per annum, you want to get to 1 billion naira. You need to get to a larger scale. You are growing. The market loves your product. You are doing well. You have structures, governance structures, succession plan. You have things that people will buy. You are already in a particular market. You understand the market, but you just want to grow. You want to grow your revenue side because the demand is there. That is when you need a lot more strategic funding because you have the ability to pay for them. You have the ability to secure those funding. Then the final stage is scale. Scale is where you want to go outside of your region. You want to go outside of your country. Your business is very big. Then you can do a lot of this alternative or asset-backed financing. You can get private equity investors, come, be on our board for 5 years. You get people to take you out. You are really at the level where you are now going for scale. You've demonstrated viability. You've demonstrated ideation. You've demonstrated growth and ability to manage growth. We are now going into new ventures. You are going into new markets. You are scaling. You can now get more sophisticated investors. Now, it is extremely important that we match the stage of our business with the kind of funding we are going to seek. As you know, and as you grow, you also realize that some funding source can come in to take out a previous funding source. What does that mean? You can decide if you're in the growth phase, you want to do an IPO. It could be an IPO where you are doing an offer for sale. So those investors, your family and friends that invested in you when you are in the ideation stage, they can sell their shares while new investors will come in and they will make money. You're already at that level. Okay, you can decide to go and meet a big bank, an Afrexim bank, an AFDB, a Zenith bank, a Jaiz bank. Okay, my business is now at this level. I want to grow it to a level where, no, you need 20 billion naira. It's within our single obligor limit. You can have all those conversations. You can call Marble Capital, call Stanbic IBTC, call, Chapel Hill. We want to grow. Raise money for us. We're ready to pay your fees, and we can pay back the money that we are needing as well. We can get infra credit to give us a guarantee and all of that. So at that level, growth stage, you can do a lot of things. You have structure, you have planning, you have staff, competent staff, you have a market you've been able to lock down, So all of that gives you different access to financing. But if you are not there, please don't use the wrong funding for the wrong stage of your business. Okay, that is extremely important. The wrong funding for the wrong stage of the business is not the way to go. Now, we want to speak to you on how you prepare to raise funds. I will repeat, the funding depends on the stage of your business. How do you raise funds? There are some basic documentation and preparation you can make. And this documentation, they align with all the stages, just that the quantum and the quality may differ. Okay, so I'm going to speak to about 3 or 4 steps for you to raise your funds. Number 1, you have to craft a compelling pitch deck, a compelling note that summarizes your business plan, that summarizes your business model, your pricing model, your valuation model. You must have it. It must be compelling. It must explain what you want to do. You must explain how you want to do it. You must explain why you think you are the right person, how you are solving the problem, and what the value will be to you and to whoever decides to buy your story. Okay? So clearly explain what you do, why it matters to them, why it matters to a market, why they should participate, and make it as short, sharp, simple, and focused, crystal clear. Sometimes you need to get consultants to help you. You can have an idea, I want to do this, I want to do this, You may need someone, an expert, to help you craft it in a way that investors will like. You may need a designer to help you work on the PowerPoint presentation that when you give anybody a 5-page document, without even going to the 3rd page, they will be ready to write their check. The presentation format, the color code, the rationale, the beginning, the conclusion. And don't forget to always ask for the money, okay? Whenever you are drafting a compelling pitch deck, ask for the money. Ask for the money. Don't assume that they've read your proposal and they should know the next thing you need is money. Do not make that assumption. So the most important one here, you must prepare a compelling pitch deck. Please, if we are living here with nothing, let us not forget that particular stage. And like I said, pitch deck preparation is needed for all stages. Though the quality, the quantum might be different. If you are going to a family and friend, your pitch deck might be an elevator pitch. It may be that a verbal pitch will be enough for you to convince your father-in-law to give you 1 million naira. Okay? You may need to convince your father-in-law by just telling him, if you do not give me money, your daughter will not get money to, to threaten him a bit, and he will write a check. I don't want my daughter to suffer. If you are going to speak to your friend will be looking at you. Do you think I have money to throw away? You may need to show him some documentation. If you are pitching to a bank, you need a robust document because they will send out your pitch document to their risk department, to their credit department, to their control department before it gets to even approval level. If it's so paperless, they will just throw it off. Okay, so depending on if you are pitching for a grant, you must show why they should pick you out of the remaining 20 people applying for the same grant. Okay, so if you are you want to pitch an AFDB that is representing 53 countries in Africa, and you are coming out of the 20 other companies coming in Nigeria to them, your documentation must be solid enough to show that you must be considered out of Nigeria. You must be considered out of the whole of the African countries. You must be placed on the priority level. So your quality, the quality of your pitch deck will represent what you are seeking to raise. That is that about pitch deck. It is extremely important. And like I said, it is different depending on the stage and the kind of funding you are raising. The next is developing financial projections. Investors want to see the future of your business in numbers. Don't just come and say, I will blow. Just support my business. I will blow. Yes, you're going to blow, but what does blow mean? Are you going to make 1 million naira? Are you going to make 10,000 naira? Are you going to make 50,000 naira? Are you going to make 50 billion naira? You must be able to show your performance in the future in numbers. If you are someone that is not good with numbers, please get an accountant, pay them, let them help you project, let them analyze, let them do sensitivity analysis for you. Okay, if you sell 20,000 units, you're not going to make profit. So if you don't sell up to 50,000, you're not going to break even. Let them give you all these numbers, and you should be ready and willing to support them with real facts. Investors want to see the future of your business in numbers. Share realistic projections. Don't just come and write things plucked from the air because they're going to question you. Your father-in-law may not question you, but the bank will question you. Okay, your presentation does not make sense. The cost, how are you going to get the staff? How are you going to get the product? How are you going to get the quality? How are you going to get all the approvals that are required? And how are you going to deal with competition? They're going to ask you all of these questions. Like I said, your friend may not ask you that much. Your wife may not ask you that much. Your father-in-law may not ask you that much. But if you're going outside of that, people will ask you tough questions, which you have to be ready for. So develop financial projections. The third is be ready for due diligence. Don't just assume that because you have a compelling presentation, you have given them numbers, people cannot ask questions. They cannot ask you, what kind of experience do you have? They cannot ask you, when are you going to retire? You know, you don't want them to ask you funny questions or questions you consider funny. No, they will ask you legal questions. When was your company incorporated? Is it licensed? Are we dealing with a CBEX? You know, are we dealing with an MMM? They will ask questions that you feel is ridiculous, but they have the right to ask you. You are the one that you need money. So be ready for due diligence. Okay, be prepared before the questions come. Make sure your documentation, your legal document is okay, your financial, your compliance, they are clean and organized. There's what we call data room, especially when you are raising funding on a large scale. Be prepared, audited financials, reporting accountants report, solicitors report on your indebtedness, your bank CRMS, your credit bureau report that you are not owing another bank or you don't have bad loans. Be prepared with all this data. You have the profile of your management staff, profile of your board. You know, be ready for them to ask for DSS, depending on the transaction, to check your chairman out. Is he a real person? Is he a fake? Is he, you know, be ready. When you have nothing to hide and you're able to be preparing yourself for due diligence, it makes it a lot easier for you to raise funds. These three, you know, major preparations, depending on the scale, they will assist you in fundraising. What the quantum you will need for when you're asking money from your father-in-law is not the same amount you're going to need when you're asking money from Afrexim Bank. It's not the same you're going to do when you're asking money from Stanbic IBTC, from Jaiz Bank, okay, from a private equity investor. But they all go through these three layers: your pitch deck, your financials, and your due diligence. And due diligence can be of different shapes. They may want to see your factory. They may want to see, even go to the regulators to confirm who you are. You know, they may want to speak to your competitors. You know, all is due diligence. They want to go to the school where you say you had your degree. We all saw in the news about last week where a pilot that's been flying, you know, South African Airways for 18 years did not pass flying examinations. You know, so anybody trying to finance, you know, South African Airways or any of the major, they will ask, who are your pilots? Let's see their qualifications. We don't want to give you money, you buy planes, and your pilots are not qualified and the planes crash. That's our money gone. You cannot be fighting with insurance people, you know. So they want to see that you have highly qualified, highly experienced pilots, and you'll be wondering, I'm the one asking you for money. I'm the managing director. What does that got to do with the pilots that are flying? I hire pilots, I pay them, they fly. No, we want to see your top pilots. We want to see your training skills, your training manual, you know, how you're equipping them, how you're refreshing their knowledge, and all of that and all of that. So all of this extremely important, but this tripod, if you are not taking anything from this presentation on funding, please take this slide, know it, and be ready for the three options. I say to you again, the intensity of each of the items will vary depending on the funding you are looking for, but they will all cut through these three major items because they just want to see that you are competent. If I give you money, my money will come back. Or even if it's a grant, they want to show if they give you the money, you will do what you say you will do. You'll be able to do it, okay? Now, I hope that is clear. You know, what are the key factors that investors consider, you know, whenever they are giving you funding? You know, if you've done all the things we said you have to do, but they still have some areas they'll be looking at, and that's the reason why they ask for all those questions. You know, they want to be sure you can monetize your products. You may be someone that you like children. So because of that, you want to be producing toys. Fine, no harm. How are you going to ensure the toys you are producing will turn into money in the next 2 years? How are you so sure? Show us. Who will design your toys for you? Where will you produce it? Are you producing them in China? What is the cost of bringing them to the country? How much tariff will you pay? Where is the market? Is it Lagos? Is it Kaduna? Is it Abuja? Are you going to be selling outside of Nigeria? How much will you need to sell? Do you understand it? Do you have a warehouse? They can ask you 50 questions on $1 million, 100,000 naira, on whatever amount you're asking for. They do not owe you the right to give you the money until you are able to show them in a compelling manner that you really understand how to turn your project into a money-making venture. Not because you just like children and you think toys are the things that kids want. So you must show, they want to see that you have a clear monetization strategy. They want to know that you have a scalable business model.
Oh, it looks like
Yes, I think we can't hear him. I think we lost him. We'll be coming back in. Let's just wait some minutes. Okay, but you can make him admin. He's back.
Okay, I'm doing that.
Thank you.
What are the key factors that investors would like to see, from you, So they want to be sure that you have the ability to monetize your ventures. They also want to see that you have a scalable business model. Okay, they want to be sure that you have a scalable business model, and they want to be sure you have an experienced founding team. Okay. Sorry, 1 second. Let me forward my slides to you so you can also project. I'm still struggling with connection. A second, please. Okay, so let's continue. So what are the key factors investors that when funding a venture? They want to be sure that you have a scalable business model, you have a clear monetization strategy. They also want to be sure that you have strong value position, and for them that is extremely important. A strong value proposition. They don't want just anybody that says they want to raise money, but they don't have any plan, or now they're going to raise the funds. They want a strong value proposition. they want to be sure that you have a traction, you have a validation, you're able to show that you are ready to invest and quickly too. You know, to them, that is important. They want to be sure that you have it, you can able to question there. Yeah. So the other thing is they want to also know whether there is a large market opportunity. A lot of investors aren't concerned about you. You know, they want to be sure that they can grow, they can scale. You know, so do you have a large market opportunity? You know, are people that will be interested in your product or project? Are they plenty? Are they just 1,000? Are they just 100? You know, they want to be sure that you are able to show off, you know, that your project can be sold across multiple geographies. Okay, so that is something you will need to be careful about. So I will repeat: what are the key factors that investors consider? You know, whenever they are trying to participate in it, want to have a clear monetization strategy. They are not interested in you just saying that this business will make money. Show us how it's going to make money. They want to know that. They also want to be sure that it is scalable. You know, there is a large market opportunity, and you have an experienced funding team. You know, that to most of them is not negotiable. An experienced funding team. Okay. Now, what are the other things that investors look at when they are trying to participate in a transaction like this? You know, they want to show that the people that will be running the business have interest in the business as well. You know, you have a skin in the game. They normally don't like it where the investors are just people that just do not have any interest in the business. No, they want to see people that have interest in the business, and they also have a skin in the game. If the business do well, they do well together. If the business fails, they fail together. So they want to be sure you are there, you know, for the long haul. What are the what are the strategies and mindset, that you must have, you know, if you want to really succeed in the money game? You know, I think it's important that we know this and we explain this to ourselves. Please, are you able to project my slide, or I should project myself?
Can you see it now?
Okay. Yeah, it's fine.
Okay.
So the strategy and mindset that investors are looking at, you know, they want to be sure that you can build investor relationship. The strategy you should have, you must be able to build an investor relationship early. What does this mean? Okay, when you want to raise money, it's not just about you doing those three things I mentioned, you know, having a pitch deck and all of that, you know, developing financial strategies and also having due diligence being not about you. No, you must cultivate trust. You must build a brand, your personal brand. People must know you. Hey, that person, his name is XYZ. You know, there's the kind of person that people would like to be their friend, to be in their corner, if I could use that word. You know, people will like people that are trustworthy, you know, people they can relate with. Those are the kind of people they want in their corner.
Progress.
People need you need to develop the habit, you know, of being able to have a brand of yourself, you know. Then you must learn how to negotiate, you know, negotiation tips and equity dilution awareness. If you do not know this, then please get an investor or get a consultant to help you. Do not shy away from hiring experts to help you when you are involved in transactions. Do not shy away from that, because it's usually helpful. You know, you must also be able to understand the story around value creation. You know, you must focus on value creation, not just capital acquisition, not just fundraising. What are you bringing to the table? What are you turning the company to in the near term? You know, so these are the things how people value the company. I mentioned the issue about franchising. The only thing franchises do is sell their names. Total put their name on your filling station. Ohando does the same. Coca-Cola, all these big names, they put their name because they've done a lot of work on value creation, not just capital acquisition. So sometimes you don't need the Naira, but you need people to trust you. Oh, if it's something that is done in that hospital, you can be rest assured that the consultants are top notch. Okay. So all of that will help you when you are trying to raise money. And sometimes it's not just cash you need to raise. You need to raise brand equity. Okay. So that's very, very important. Now, there are a number of mistakes that people make when it comes to raising funding, and these are some of these mistakes can be really, really damaging. The first one is bad timing. Okay, bad timing. It's important that the timing should be right. You cannot be too early, neither could you be too late. Okay, and please, we have different skills. Some of us are entrepreneurs, some of us are business owners, some of us are business managers, but some of us are financial advisors. Okay, so even though you're a business manager, you're an entrepreneur, you know the in and out of a business. Okay, there are sometimes all you need is just someone outside and a KPMG, a firm of auditors, a Stanbic IBTC to analyze your business and be able to advise you that, Oga, in 2 years' time, you are running out of equity. Why don't you start the process of raising equity today? And when they say start the process of raising equity, it's not that you go to the market and make an announcement, I want to raise equity. The example we gave of Taj Bank in the market today raising 20 billion naira was not a decision they took today. It was a decision they took 3 years ago that we would need in the future, 3-4 years ago, to be able to raise money at short notice. Let us carry out a program of get an approval for a program of 100 billion, even when they didn't need the 100 billion. Okay, a year after they tried with 10 billion, 2 years after they are saying, okay, 3 years after, let's even do 20 billion, because they have already built the reputation and all of that. But the timing matters. You have to start the work at the right time. And I also explained to us earlier that the right funding must match the stage of the business. We must be careful. Otherwise, you may be trying to raise cash too early or too late. And sometimes when you raise too early, even if you successfully raise the money, you will not be able to deploy it properly. We also saw what happened with Nigerian banks in the 2008-2009 saga. They raised 25 billion, and what they do, they put everything in the market, margin funding and all of that. The market crashed. People lost money. Banks were shut down. People lost their jobs, despite raising money just 5 years earlier. But they raised too much money at an early period. Their growth was not yet solid enough to utilize the funding appropriately. Okay? Unrealistic numbers. Please, whenever you are trying to raise money, I know we are all projecting, so nobody is lying. We are all projecting, but let our projections be realistic. Okay? Then we must not fall into the problem of thinking that we don't need to keep records. No. I know how much sales I made last year. Nobody can cheat me. I get test alerts for all sales. Nobody can cheat me. No, I know when my product is sold. Yeah, You have all your answers in your head, but you are not keeping record properly. No, I know when the stock of Tetramycin gets to 20, we're going to reorder. We're reordering from Lagos. They will bring it to my pharmacy. Where is record? Where is software you are using to have record keeping? I cannot spend money on software. It's expensive. Is this, is that? So we need challenges. Record of transparency. You even leave yourself open for fraud. You're trying to save cost. You don't want to hire an accountant. They will collect money. But you are not. When it comes to you now needing funding, you now be running helter-skelter. Okay. Then we need to choose the right quality quantum of investor for the right project funding we need.
I explained that, your MVP stage, your growth stage, your scaling stage, you need investors quite all right, but you need different types of investors for different stage. Even within the class of investors, you may need to identify, do you really need someone that will be troubling you on the board, or you need someone that won't go with you on the journey, good, bad, ugly periods? So these are factors that you must consider. You must choose the right investor partners. And I will just share with us very, very quickly 2 case studies. And I'm sure all of us here, we have multiple case studies that we will know about. Money, which today is a unicorn, which today is something that, you cannot move around Nigeria 100 meters or a kilometer. You cannot go to 5 shops without one of them using Money Point. They've gone that far. They've done so well. You cannot go to a mall and 10% of the people in the mall will not be using Money Point. They started up in 10 years ago by Tosin. They bootstrapped initially using their own money, their own savings, for the initial growth of the business. But by 2019, they were able to raise $5 million, and they subsequently raised multiple hundreds of millions of dollars after that. But to do all of this, it was sequenced properly. They hired the right amount of staff. They built the high quality of reputation. When they needed to raise additional multiple funding, they went to poach the CFO of one of the leading banks in Nigeria, Stanbic IBTC, to come and be their CFO and ED. Knowing well they need a person like that to be comfortable, believe in their project, and to be able to use his personality to help them raise. They do a lot of record keeping. They can tell you today how many people use their platform. They can tell you how many people their platform last year. They are doing so well. They make sure they comply with regulations. Make sure they contribute to the environment, governance, to the community. Make sure they engage with their partners. So that is a business, and they know the right funding to get at the right time, and that is what they did. Okay, so that is a case study of getting the right funding at the right time, having very realistic numbers, and also keeping proper records, and ensuring you have the right caliber of investors with you at all points in time. Another one in the IT space is, or fintech space, is PiggyVest. That Odunayo and a few friends, started up as well at the same time as Money Point. They use social media to scale their business. They built a reputation. They raised funding when they needed to, the right amount for funding for their nature of business. Dangote Refinery is another project in case. The company, Aliko Dangote, has been building multiple businesses, saving money, and when it was time for him to go mega, he was able to access funding, even though it's not always easy. When you're getting funding, people will say no to you. You don't have to feel bad when you approach 10 people and 9 say no. The 10th might be the one that will say yeah, will align with you. There are many reasons why many financiers will say no to you that are not your own making. It could be that they are not interested in your line of business. Maybe they've been burnt there before. It could be that they don't have the capacity to give you the tenured funding you need. It could be that their own cost of capital is a lot higher than what you are looking at. There are multiple reasons. Maybe they have geographical location, they have regulatory limitations, So it could not just because they don't like you, they're not giving you money. No. There may be many professional reasons why you have all your pitch deck, you have your financials, you have your DD readiness, and the investor will still say no. Well, that should not stop you. You have to knock on the doors of 20 to get 1. You have to knock on the doors of 50 to get 5. But when you get the right investors, you'll be happy you did. And that is why fundraising is also a specialized activity. You cannot be running the business and you think you'll be the best person to also be raising your funding. Especially, no, get the right person, the right staff. When they need you, they come to you. You are the entrepreneur, you are the manager, you are the one making the moves, So let people help you execute while you make the right moves at the right times. So I would like to conclude by saying to us that funding is a tool. It is not the goal. It's just a means to achieve the goal. It's just a factor of production. In our economics, we're taught factors of production. We have like 4 different factors of production. That's at elementary level. But finance is just one. Funding is just one, is a tool. So be ready to utilize the tool appropriately. You need to please choose the right funding for the appropriate stage of your business growth. Be investor ready. Don't wait until 2 years' time when you need investors to start doing things the right way. Transparency, record keeping, building your own brand, these are all things that are important for you. People must know you, they must know who you are, what you're doing, and all of that. Don't say it is a waste of money to be spending money for PR. No, it's going to help you later when you want to raise funding. Because you go to a bank or you go to a finance person and say, you want to, who are you? But if they've been hearing your name positively, you are the one that did that project in Kaduna, you're the one that did structure in Calabar, you're the one that did this in Kano, you're the one that, when people already know you, it opens the door, it softens the conversation and makes it easier for you to raise the funding. Be investor ready at all times. Please understand that smart money beats fast money. Smart, appropriate, tenor-wise, cost-wise, size, they are much better than fast money. If people just dump money at you, if you're not careful, they may be laundering money through you. So please, let's be extremely careful, and ensure that we get smart money by doing the right things at the right time. And finally, start with what you have. You are starting from an ideation stage. Start with your friends and start your savings and be ready to scale up as appropriate. So with this, I would like to thank you for your attention and for the opportunity to make this presentation to you. Thank you very much, everybody in Lasubenga. Assalamu alaikum.
Wa alaikum salam wa rahmatullahi wa barakatuh. Jazakumullah khairan. I think this was full loaded. Really appreciate you, and thank you for your time. There's a lot to take away from this session that I actually have summarized. To successfully fund your venture, you need to clearly define what your business does and actually assess exactly how much funding you need and why. You also talk about saying that there are various funding types, including self-funding, angel investors, venture capital, equity financing, grants, and debt, each suitable for different business stages. From idea to scale. You also talk about preparing to raise funds requires a sharp pitch deck, realistic financial projections, and organized legal and compliance documents. You also said a winning mindset includes building investor relationships early, understanding negotiation and equity dilution, and focusing on long-term value creation. You also spoke about some of the common mistakes that we need to avoid, which includes poor timing, unrealistic projections, disorganized records, and partnering with wrong investors. I would say that, yes, definitely, I'm going to go back to watch this video over and over again. And I'm also hoping that we could have you to mentor us, inshallah. We're proud of you. We'd like to take questions at this point. If you have questions, please kindly drop in the chat box while I take them. I would also like to ask, so for small businesses, for those who are into perhaps 500,000 naira budget business, is this also applicable to them, sir? For small businesses, I wanted to ask, is this also applicable to them?
Yes.
Okay.
The answer is yes. It's applicable to all businesses. Okay. The only difference is the nature and scale will be different. Those three things that you need, those three key things that you need, preparing a good pitch, having projections, and also being able to you need it for any funding that you need. If you're able to master these three things, the scale and manner would be different. So if someone that is doing a 500,000 business, does not need to go and hire a consultant, but you need to have the numbers that if you're going to buy tomato of 50,000, I need 10 tomatoes, bags, and I'll sell them in 3 days. I'll make X amount of profit and all of that. When you're going to that microfinance bank and telling them you need 200,000 naira to increase your business, they will quickly evaluate and say yes when they see that you've been able to prepare yourself. When they see that you are not collecting cash, you are using all your transactions are going through bank accounts. Even if you collect cash at the end of every day, you are banking them, and your sales matches what they can see in your numbers, in your accounts. That shows that you are getting yourself ready. You are transparent. So the answer is yes. You scale their due diligence earlier, better, faster than someone that does not even have a record. So those items are important, and I think even for all folks, no matter the business size, you need to just get everything ready. Those three values: pitch, financial projections, and DD. Yeah, thank you.
All right, thank you so much, sir. That's well noted. We're still waiting for questions to drop. For those who have questions, or if you would like to, to speak, just let me know so that I can unmute you, please. Okay. Please confirm. Can you speak now?
All right, assalamu alaikum wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh.
Jazakumullah khair, Alhaji Abdullah Hakim. We really appreciate. My question is really around for some of us that we are we are in paid employment. Okay. So we sometimes believe that we struggle between our running costs and having something left over for us to quote unquote experiment investment. Okay. Because I know you were in a paid employment and then transited successfully, alhamdulillah, into an entrepreneur. So what advice can you give us in clear terms? Okay, I went through this. Maybe you had some of the fears we currently have, maybe not, right? So can you share your thought? That's number one. Secondly, as an investor or as an entrepreneur today, if you look at the area of private equities, like people funding businesses, which I think it's also an area that you are well versed in. What do you think an investor will be looking at mainly to provide funding? Because some of the challenges we have amongst us is some brothers will be complaining that people are not funding them, they are not supporting them. Maybe the brothers are selfish, that they are not giving the money, or maybe they are not even seeing what they're meant to see. I just also want you to enlighten us on that as well, sir. Thank you. I don't know if my questions are clear too.
No, they're clear. Very much. Thanks, Kazim.
Thank you.
Okay. Assalamu alaikum. Yeah. So I will answer the questions. The first one, again, being able to, in paid employment, how do you save, or how do you make sure you have something that will be useful when you're about to set up? You have two things to build. If you're in paid employment and you think you need you may want to exit eventually. The first one, which is easier, saving some money. The Yorubas will say that okay, essentially it means that you must, and is a must, out of your funds, invest part of it. It may look difficult, but it's really not. If you are doing, for example, mutual fund investments, you don't look at the amount being small, but you look at the consistency. Have a debit, a direct debit instruction. You're investing 50,000 naira, you're investing 100,000 naira, you're investing whatever amount you can invest, 10, that's comfortable with you, but be consistent with it. It helps. It goes a long way. At the end of the day, I've saved 10 million. I've saved 2 million. I've saved 500,000. It is something, okay? It's to get to a level you don't even know when the money is being taken from your account because you've already invested it. You've already given the instruction that it should be invested. So that is one. So just try as much as possible, whether it's through your bonus payment, whether it's through whatever amount you see, just make a strategic decision that out of this 100,000 naira, I'm saving 10,000 naira. it's going to affect some expenditures. So instead of you to buy fuel for 50,000 naira, you may buy fuel for 40,000 naira for your car, and maybe one or two places you may need to go on a bike or go in public transport. You don't mind whatever. If you consider it shameful, ignore it. Okay, you know you are building for the future. If you have 4 cars that are guzzling fuel, reduce it to 2. You know, and just be ready for that savings. You know, the second thing you need to save, which is maybe a bit more difficult than even saving money, is building your integrity, trust, and network and competence. Okay, these are all valuables that will come to the fore when you are on your own. People must trust you. Then you must be properly networked. People must know you. Go for people's birthday parties. Go for their naming ceremonies. Go for their weddings. I mean, in Nigeria, we love parties anyway. You know, attend these events. It's at a cost to you. Okay, because you're going to spend money there. Sometimes you need to buy Ashobi. Sometimes you need to buy filler. Sometimes you need to, give them gifts. Yes, but participate. Let's be in that social network. Go for dinners. Go for parties. Go for conferences. This is building your network. Okay, let people know who you are. Oh, who is Kazim? That's Kazim. If you are the social media type, being on the social media, write quality report, even if it's once a month or whatever. Let people know who you are, the value you are trying to espouse. You don't wait till 20 years down the line before people will know you. Then finally, your competence. Yes, you're on your job, you are good at your job, but you also need to sharpen the saw. Sometimes you sharpen the saw at your own cost. You go for that training. You go for that training at Lagos Business School. Sometimes your company is not paying. You are the one that pays. You go to POIS. I cannot speak publicly. I'm not a good presenter. Go to somewhere where they will train you. Oh, I need to learn Python. I need to learn AI. Train yourself. Improve your competence. So I'll repeat, apart from the money that you need to save, which you should try, no matter how small, because at the point they will ask you, where is your own skin in the game? You must be able to bring 1 million naira. You must be able to bring 5 million naira. That is my own contribution. Even if others will bring 100 million, then your competence, your trust, people must trust you. Then your social life, your networking. It's something that a lot of us take for granted, especially our brothers. We believe we are just, I must come to you and you must know me and you must know. Prove yourself.
I think your network is a bit unstable, sir. Okay. I don't know if anyone can hear me.
I can hear you. I think it's his network.
Okay. Yeah. Okay. So once it's done, okay. Yeah, you're muted, sir. If you're speaking, you're muted. You're speaking, but I think you're muted. Okay, let me check. Let me check. I need to. Oh, something is wrong. Yeah, it's showing that you're muted.
So you need to unmute. Yeah.
Oh, okay. Let me unmute. I think he has 2 devices, so I'll just do it this way.
Okay, can you hear me now?
Yeah, we can hear you now.
Can you hear me now? Yeah, we can hear you. Okay, so did you hear my answers, please, or I should repeat?
I think we got it. I'm
Okay,
sure the
thank you.
brother, yeah, I think we got it. Thank you so much. So we'd like to just take the last question from Mr. Oyedinran Ashimiyu. Please, you have the floor. You can unmute.
Assalamu alaikum, sir.
Wa alaikum salam.
Alhamdulillah. I just want to ask you, my question is a little bit related to the last speaker, last questioner. If you are in a paid employment, you have business idea that's very viable. You have proposal on grant. But the problem... Hello, sir. Hello?
Yeah, please, you can go ahead. You can
Go ahead, Mr. Ashimiyu. Go ahead.
Now, you are in paid employment, but it's very difficult for you to be in that business at that present because you have to get money to be funding that business. My question is that what is the best strategy to have a business partner that can be in front of that business before you can even retire to that business after your service here? It was over.
I Square, Alhaji Abdulhakeem is muted.
Okay, let me check.
Maybe you can try and unmute him.
He's actually a co-host. Okay, let me.
Maybe unmute his second device.
That also okay. I think you can speak now.
Okay.
Press.
But we can't hear him. Maybe unmute his second device. He's actually speaking, but we can't hear him.
Can you hear me now, please? Sorry, my challenge,
Yes,
my
sir.
system
Yeah.
is a bit challenged there.
We can hear you now.
Okay, but I didn't get the question. Apologies.
Okay, the question is, if someone is in paid employment and he has been keeping money for some investment, he has a business idea, very lucrative one. So he now needs someone to carry on with that idea while he put down the money so that by the time he retires from his paid job, he can retire into the business. So he's saying that what's the best approach to that? How can one, apply that? In what way one can adopt that style that will work?
Okay, if I got the question well, the major challenge is you have an idea or you are still in paid employment. You are not ready to leave that paid employment. Meanwhile, there's someone that could do the business for you. So what's the best way to approach it? Is that the question?
Yes. How can you, what are you
Can
going
you
to look
get
out
someone?
for?
Yeah.
Yeah, can you get someone to do it for you? Something like that.
Okay, so two ways. The answer is yes. You can always get someone to do it for you, but you must understand that there must be proper agreement. Even in the longest verse in the Quran talks about keeping agreements. There must be proper agreement as to what you are contributing, whether it's ideas, whether it's money, whether it's time, anything you are contributing apart from you being there physically, and what you are meant to get in return. How the business will be monitored, to be structured, to be run. Everything must be fully and carefully outlined. The conditions that can lead to that agreement being scrapped, being discontinued. Everything must be disclosed, discussed, and signed off. So everybody knows their responsibilities at the beginning. So if that is the case, then by all means, you can have someone run your business or run with your idea while you provide necessary support. The second point I will say is, yes, you may think that by you not being there, the business may not be running optimally, but that's a fallacy. Nobody is indispensable. Okay. We all saw what happened even with a global giant like Apple. When the founder of Apple, eventually died, the successor has been taking Apple to new heights, just because they had proper structures and they had proper governance and all of that. So we should not think because we are not, because that's a concern a lot of people will have, because I'm not there, the business will not be run as optimally as it should be. And when you are ready as well to come into the business, please let the agreement be reviewed again so that there will be minimal issues or clashes with the parties. So by all means, go ahead, support the business, give them ideas, make sure there is no conflict between what you are doing on your day-to-day and the business that you are running, because you must be people of integrity. You must not be taking money from your current business and be taking it to a new business and you're still collecting salary. Okay? Thank you very much.
Thank you so much, sir. We really appreciate it. Because of time, I think that we'll stop. We'd like to stop at this point, but we really appreciate your presence. Thank you for taking our time. And we're hoping that, when next we call on you, you would oblige us, sir. And to also add that, we'll also get in touch with you for some of us that need mentorship. We hope that you would also oblige us. Thank you so much, Jazakumullah khairan. Maybe the president has one or two things to say before you leave, sir.
Okay, Jazakallah khairan, Alhaji Abdulhakeem Wewale. We are glad you accepted our invitation to take the lecture. So before you go, I just wanted to give advice to our entrepreneurs.
Well,
We
yeah,
are quite small entrepreneurs, small scale entrepreneurs amongst us. They have businesses they do. Some of them does some kind of trading. Some of them have business ideas, but they have challenge with funding. And I'll tell you one of the reasons I think they have that challenge. Maybe you can just give us a general advice. One of the reasons is the issue of trust. We've had cases whereby, you need this business money, I want this business, you have this idea, I have this shop, and some others come together and give you money. And maybe after 3 months or 6 months, you say that you make these returns, and at the end of the day, there is nothing. Then you come again and say, I need this money, then people will turn you down. Or the fear of, I've done it before. I gave this brother some amount of money, I didn't get anything, now this one is coming, I can't do it again. So I want you to give advice to our entrepreneurs. Some of them will even come and say they want to borrow. But by the time they borrow, and then they promise they will refund by this time, and you just discover that they blocked up. You try reaching them, you cannot even reach them. So we have this kind of challenge. So, but for me, I have a belief that if you are trustworthy, people will still commit their funds to you. So I want you to just give them, every one of us, a general advice, so that people that want to go and ask others for money, will understand that, I should have this reputation, I should have done this ahead, and if I'm turned down, they should look at it with objectivity. So that's just what I want you to give us as a takeaway. I don't know. Alhaji Abdulhakeem.
Network.
Okay, network. Okay.
Okay, so while we're waiting for him to respond.
Can start the Slido. Yeah.
Yes, so I'm going to go ahead to drop a link on the chat for interested persons who would like to join in the Slido, where we give out a token for whoever comes top based on the questions that we're going to be showing on the screen. So give me a second while I quickly do that, paste the link on. So please, let's join with our real name. Okay, I just posted it. So let's endeavor to join with our real name.
Okay, Alhaji, one more thing, sir. We just want to go through a poll with regards to the lectures you give to us. Then after that, you give us your parting words with regards to my question about advising small entrepreneurs in our midst that need funds, mega funds to support their businesses. So I don't know if you had the question I had, as in the question I asked before.
Talk has been very funny, so I'm not hearing. So
I have to repeat. Okay, sorry about that. Sorry about that. I will check your network. I will get my team to check and I'll fix that problem.
No, it's from my end.
Okay. So the
Mr. Mayin,
what
that is
I
not good.
okay, what I said is that we have
But let me know if I can
quite
quickly respond in a minute.
okay, sir. So the question is, we ask you to advise small entrepreneurs in our midst. You know, we've had cases of small entrepreneurs that does some trading, some have their businesses, but they need like capital, legal capital. Then some brothers come together, we give such person money. After a while, there'll be nothing to show. And the person will come again another time asking for funds. Then you see that people are turning the person down. Or some people would have had an experience with the brother, then another one come and they say no because of the experience they have in the past.
Let me see if I can answer. Let me see if I can answer
Yes.
because I need to get off where I am now in about 2 minutes.
Okay,
I think
sir.
the major
So go ahead, sir.
thing is
Yeah.
documentation. And I think we are always afraid to document things with ourselves because we feel they will say, I don't trust you. When you are going into a transaction with someone, spend the time to document, pay a lawyer, let lawyers do their job, have a detailed agreement, whatever you can think about, and let whoever you are giving the mandates sign off that they agree. And if they don't do what is agreed, these are the consequences. Let them agree on how records will be kept. Let them agree that they will be at work at 8 a.m. They will not leave until 5. They will not put money in their pockets. They will pay all the funds into the bank. Let them agree on how money will be released from the bank. You know, we do a lot of things based on trust. You know, even if you are doing a deal with your partner, with your wife, whatever, if it's getting to business level, let it be documented. When you are going to a company, any bank, they will give you an employment letter. They will give you their policies. It's not because they don't trust you, but it helps if everybody operates on agreed terms, not assumed terms. You know, when we have assumptions that this man will always do the right thing, it may not be that he's trying to, you know, be dishonest. It may just be that he's not competent. You know, and when you say someone is not competent, it's not an indictment. It may be that you are not good at something. You are not good as a footballer, or even you're a footballer, you're not good as a top striker. Maybe you are good as a goalkeeper. Maybe you are good as a defender. But as far as this job is concerned, you are not competent. It's a statement of fact, not an abuse. We must be bold enough to tell ourselves the truth. I'm an IT person. If you're talking to me as from an I'm not, if you're talking to me from an AI perspective, I'm not competent. I cannot code. So if you are giving me a deal and you say, because it's Akim Oyewale, you must be in charge of this, you must be in charge of that. And I say, okay, bring it. I'm your brother. I will look after it for you. But I can't do it. I'm not competent. I'm not a salesperson. I'm not a this. I'm not a doctor, you know, a medical doctor. You know, so I think we must be bold enough and confident enough to make sure what we want to do, we have it, and there are consequences for breaching the agreement. And when you breach the agreement, we must not be shy to pull the triggers. If the consequence is that if there's a loss of 5%, you're going to pay from your income. Don't say because it's my brother, then I'm not going to say that it should not pay. I don't know whether I'm speaking, you're hearing me. My point is, let's throw away this issue of trust. Let us do what has been prescribed in the Quran. Let us do what is document things, no matter how minute, whatever you can think about. And if the other party is not willing to sign off that they agree to all of these things, then don't give them the money or don't allow them to run your business. And that's what I could say. You know, competence is important. You must only give people that are able to do something what they should do, not because you want to help the person. If you're helping the person, then your requirements must be reduced. But if you are going to be demanding professionalism, then only give people that are competent. I hope I've been able to help.
Yes, sir.
Assalamu
Thank you
alaikum.
so much. Wa alaikum salam wa rahmatullahi wa barakatuh.
Thank you so much. Thank you so much, Jazakumullah khairan. Bye-bye. Okay, so because of time, we'll just go straight to slide. I think we have a number of persons joined, so I will go ahead to start the quiz right now. Okay, let me see. Okay, first question. Okay. Question number 2. Yeah, congratulations. We have our winner, Khadija Adebiyi. So we'll get in touch with that. Thank you everyone for participating in this. I mean, this is just to encourage us to listen during the course of the lecture, and also to, I mean, in a little way fund whatever business that each and every one of us does. I mean, so thank you everyone for joining. So we take the closing prayer at this point. To do that, we'd like to call on the president for a closing remark and prayer. Thank you, sir.
Jazakumullah khairan, Brother Ibrahim. So, first and foremost, we have our next session next week, and that's on. Sorry, let me just do a quick check of the program for next week. Okay. Okay, so it's on digital transformation, right? Digital transformation, innovation for entrepreneurs. And that will be taken by the CEO of Payvantage, Femi Balogun. So it's about how we can transform our business digitally and in an innovative manner. So I want to call on everyone to just keep a date, same time next week, that's Saturday, 28th of June, 10 a.m. to 11 a.m. We'll be having on board Femi Balogun, CEO of PayVantage, to discuss with us digital transformation innovation for entrepreneurs. Then secondly, I want to say that congratulations to the winner. The winner will be going home today. It's a token of 50,000 naira to support our business. So congratulations, Mr. Khadija. We'll reach out to you for that fund. Then we want to thank Allah subhanahu wa ta'ala for making this session a successful one. We pray to him to accept from us as acts of worship and all the lessons we have learned. We pray to him to make it beneficial to every one of us, all our entrepreneurs, and in our personal endeavors. We pray to Allah to reward the lecturer, and that Elijah Blackman will be immensely, guide him in his sojourn, grant his heart desires, and also bless his businesses. He's the CEO of Maple Capital. May Maple Capital become a success beyond his imagination. And we all the listeners too, we pray to Allah to accept this effort from us, grant our heart desires, bless our businesses, our sojourns, our endeavors, and accept all our prayers. All those things we have been asking, we pray to do it for us in a way that will appreciate. And all those things that have been bothering us one way or the other, those we could say, those we couldn't say, we just keep to ourselves. May come and ask Allah, let us overcome all those challenges and grant us our heart desires. سبحانك اللهم بحمدك أشهد أن لا إله إلا أنت أستغفرك إليك سبحان ربك رب العزة عما يصفون وسلام على المرسلين الحمد لله رب العالمين.
Assalamu alaikum.
وعليكم السلام ورحمة الله وبركاته.